investing genius. You don't need a crystal ball. It's not about trying to find that one miracle stock that's going to make you rich overnight. In fact, it's pretty much the exact opposite. It's about investing in, well, everything, all at once. Yeah, I know, it sounds kind of crazy, but stick with me. Let me explain.
Okay, think about it like the music charts for a second. The hottest songs, the ones everyone is streaming and buying, they shoot to the top of the charts. And the songs that nobody's listening to anymore, well, they eventually just fall off the list completely. The stock market, in a way, works just like that. The S&P 500, that's basically the Billboard Hot 100 for the 500 biggest companies in the US. When a company is crushing it, it rises up the ranks. And if a company starts to struggle, it gets kicked off the list, and a new, stronger company takes its place. So here's the real kicker. An index fund lets you buy that entire music chart with a single click. You're not trying to guess which song is going to be the next big hit. Nope. You're just betting on the success of the entire music industry as a whole. An S&P 500 index fund does exactly that for stocks. It lets you own a tiny little piece of all 500 of those top companies. We're talking Apple, Microsoft, Amazon, the whole shebang.
And this is why it's so powerful. First, you get instant diversification. That's just a fancy way of saying if one company has a really bad year, it won't wreck your entire investment. Second, the fund does the hard work for you. It automatically boots out the losers and promotes the winners. It's the ultimate set-it-and-forget-it approach. Oh, and here's a little pro tip for you. Look for funds that say accumulation or ACC. That just means they automatically reinvest your profits or dividends to buy you even more shares. It's like putting your growth on autopilot. All right, so that's the big idea. You get the what and the why. So now let's talk about the how. And trust me, getting started is way easier than you probably think. In fact, you can do the whole thing right from your phone. Okay, but wait, before we go any further, there is one crucial pit stop. This is non-negotiable. Before you invest a single penny, you need an emergency fund. We're talking 3 to 5 months of your essential living expenses sitting in an easy-to-access savings account. This is your safety net. This is what stops you from having to sell your investments at the worst possible time if you lose your job or your car breaks down. Seriously, do not skip this step. All right, you got your safety net? Good. Now it's just 3 easy steps. Step 1, open an account. You'll want one that's tax advantaged, which basically means you get to keep more of your profits. In the UK, that's a stocks and shares ISA. In the US, you'd look at something like a Roth IRA. Step 2, deposit some funds. Just connect your bank account and move over whatever amount you're comfortable starting with. And step 3, this is the most important part, put it on autopilot. Set up a recurring investment to automatically buy your index fund every single week or every month. And look, you absolutely do not need a lot of money to do this. The source we're looking at today actually mentions a little experiment his son is running. He's been investing just £5, literally the price of a coffee, into the S&P 500 every single day. And guess what? After just 3 months, he's already up over 5%. It just goes to show you, starting small and being consistent, that's where the real power is. Now, a 5% return is great, don't get me wrong, but the real magic, that doesn't happen in just a few months. So what happens when you let this simple, automated strategy just run for decades? Okay, let's run the numbers using the example from our source. Let's say you invest £250 every single month for 31 years. Over that entire time, the total amount of your own money that you actually put in adds up to £94,000. That's a decent amount of savings, right? But thanks to the magic of compound growth and that 11.23% average annual return we talked about, that £94,000 of your money could have grown into, wait for it, over £1.1 million. That is what people mean when they say, let your money work for you. It's not a straight line up. It's a curve that gets steeper and steeper. You think that's crazy? What if you just kept going for another 9 years, a total of 40 years? That same £250 a month could potentially become over £3.5 million. It's insane, right? It's those last few years where the growth just goes completely vertical. Now, I know exactly what some of you are thinking. Okay, this index fund stuff is cool, but what about picking the next Tesla, the next Amazon? I get it. It's super tempting, but you have to understand that that is a completely different game. Let's break it down really simply. You've got day trading, that's all about staring at charts, making short-term bets. Honestly, leave that to the pros. Then you have stock picking, which means you're doing deep dives into company financial reports. That's for people with a lot more experience. And then you have index fund investing. Look at that last row. It requires basically no analysis. It's designed for the super long term, and that right there is why it is, hands down, the best place for a beginner to start.
So when you step back and look at it, the big scary market crashes, they aren't the biggest threat to your financial future. Not if you have the right strategy. The real risk, the one thing that will absolutely cost you a fortune, is just waiting. It's the cost of delay.
Just look at this chart. It shows what your portfolio could look like by age 55, depending on when you start. If you begin at 25, your money has 3 full decades to work its magic. But if you wait just 10 years and start at 35, you don't just lose 10 years of putting money in. You lose the 10 most powerful years of compounding growth. Look at the gap between those two bars. The difference in the end result it's just massive. Time truly is your single greatest asset in this game.
So here's the bottom line. You don't need to be an expert. You don't need a ton of money. And you definitely don't need to be afraid of the market's crazy swings. All you need is a simple plan, just like this one, and the discipline to just start. You've probably heard that saying, the best time to plant a tree was 20 years ago, the second best time is now. Well, it's absolutely true. So the only real question left is, what are you waiting for?